Hello, I'm Brian Roten, senior reporter for Hotel News Now, here on the second day of the America's Lodging Investment Summit in LA, and I am here with Amanda Hite, president of STR, a CoStar Group company. Amanda, thanks for being here with us today, and I think what everyone is going to want to hear from you is just a little bit more about the most recent forecast
Yeah.
for the U.S. industry. So, for those who were there or couldn't be there, can you at the numbers panel yesterday? What can you tell us? Give us an overview of the latest.
Yeah, it's probably not the most exciting forecast because for 25, we left it unchanged. Although we made some tweaks in the forecast, but we left RevPAR at 1.8% growth for 25. Um, and the tweaks were really we shifted the growth more into the first half of the year than the second half of the year from our previous forecast for 25. And that's being driven by more demand than expected from the hurricane impacted, disaster related impacted markets. We've seen stronger demand coming into the first quarter, carried over from those events last quarter of the year. And we made some tweaks in the chain scales for 25, but overall pretty similar. We took demand for the luxury segment up just slightly, so it lifted RevPAR just slightly for the luxury segment from our previous forecast, but all in all, pretty similar story. We have not taken into account any changes in administration policies. I think that's a lot of what people are waiting to see. And with this forecast, there's just not enough certainty about what any policy changes will be, what's going to happen, that's not factored into this outlook for 25. And then for 26, we actually reduced RevPAR growth by 40 basis points. So we have 26 RevPAR now at 2.1%. And that downgrade sort of is just really an offset of the stronger disaster performance, that it's going to be a very more difficult comp in 26. So we've pulled some of that growth into 25, and we've got a more difficult comp. So that's what's driving that downgrade on the 26 RevPAR number.
Could you dive a little deeper into the factors at play that really just kept things kind of the same?
Yeah.
I mean, what's not different?
Yeah. I mean, the issue is like we still see this bifurcation as you look at the chain scales. There's this bifurcation in demand. We expect demand to continue growing on the upper tier side of the chain scales, and that upscale, upper upscale, luxury segment. The business that's where we have demand coming in, it's group business. Group will be strong. We've got some business transient. It's the occupancy in weekday is growing. We saw that ending 24. We expect that to continue. The luxury customer, yes, they're still not luxury, sorry, leisure. We've still got leisure business, but it's going to be more of the same. There's not a big demand driver out there for more expected demand on the leisure segment because we've got the same issues of inflation and just price conscious customers. And you see that, really impacting the mid to lower tier of the scales. I will say we are forecasting for 25 an improvement in RevPAR on economy, where we've got RevPAR going positive for the economy segment, which is really positive because we've had 2 years of negative RevPAR growth for the economy segment. So this will be the first year since 22 that economy has seen positive RevPAR growth. And the economy segment has been a beneficiary of this disaster-driven demand. We see that benefiting more of the mid-scale and economy segments. So that's been helpful. But outside of, a maybe disaster-driven demand impact, what's different about the demand drivers for this year? Not a lot. We don't expect international to come back significantly stronger this year. We think we're still going to have that deficit between international outbound and inbound. We think the real opportunity for international inbound comes in 26, where we have the World Cup in the U.S. There's some hope and optimism that increased airlift capacity to Europe will help bring more international inbound this year, but it's probably going to take 26 in the World Cup to really get that going, because people will wait to make that trip until 26 with the World Cup across the country.
To jump on something, talking about the economy segment, something that came up during the numbers panel yesterday, looking at economy supply and just what is going on in that segment. I thought that was really, really interesting, if you don't mind.
Yeah, I think that's a real good tailwind to performance in the economy segment. Is the supply growth is, we expect 5,000 rooms to come out of the economy segment this year. And then as you look at independents, which are a lot of economy priced hotels also, we've got another 3,000 rooms coming out. So you've got closures in the economy segment happening faster than the new supply that can come in. So that's a real benefit to the existing hotels in the segment. It allows a little more pricing power because you have just less supply there. But yeah, that will be a tailwind for that segment to help with the demand and the pricing of that demand that is coming into the segment.
Yeah, having particularly covered California hotel development and knowing what they're doing with their home key, where they buying older hotels, a lot of them economy hotels, and then being converted to to housing, that's taking a lot out of supply. And I gotta imagine, just given the overall development environment, I gotta imagine it's difficult to make a new build economy hotel. That's gonna be kind of hard to pencil, I think.
Pencil out right now in this environment with not significant revenue RevPAR growth, that for sure it's going to be harder to pencil out. And I think, could it be turned into housing? It certainly, we saw that accelerated in a market like New York in 23 going into 24, where closures were happening because owners were choosing to turn the supply over to city for migrant housing. I think there's owners who are looking at, can I sell or turn it into not necessarily migrant housing, but just housing availability. That always happens. There's a lot of premium economy supply kind of in the pipeline, so we'll see if that gets going. It's in planning phases. It's taking a lot longer to move things under construction. So I think you've got another year or two where these low supply growth in this segment will be beneficial for the revenue and sort of operating environment for rate growth.
Jumping over to just other economic factors. Looking at the forecast, looking at projected ADR growth. Growth is good, but something else is still growing faster.
Yes. Right. Pretty much all of our RevPAR growth is coming from rate again. We saw that last year, and we're expecting 25's ADR growth to be 1.6%, which is still below the rate of inflation.
Do you feel like a broken record?
A little bit. I don't know about a broken record. It's just, I think everyone's wishing for more growth and optimism, and it's a lot of the same. And I think that, it's tough because you want to grow, but at least it's not, there aren't a lot of negative kind of headwinds out there. There could be, and you could get in that mindset, but not like, I think we have to be confident in, like, we know this, we've been operating really well. We've gained efficiencies. We've focused on productivity. I think owners are doing and operators are doing a really good job trying to minimize costs. We've had a year of double-digit expense growth, and costs are stabilizing. They're still challenged, and it's very challenged when you don't have rate growing at the pace of inflation. It's really hard to the bottom line.
Yeah, having just sat through the Lodging Industry Investment Council meeting yesterday, just hearing a lot about, even though things have mitigated somewhat in certain areas, costs are they're always an issue, but it's, a lot of concern about profit margin just
Yes.
shrinking.
So, I mean, our forecast for 25 is that profit margin for the GOPAR is we expect it to be slightly stronger in 25 than what we saw in 24. It's going to depend on where you are, what type of asset you have, what that looks like. I think for some operators, they're going to have slightly stronger margins in 25, but some will not. And when you look at EBITDA, I think that's going to be, for owners, EBITDA matters, and there's going to be still a lot of pressure. I mean, insurance is still increasing. We don't expect that those costs are going to necessarily stabilize or moderate. So EBITDA will continue to be impacted, and those margins are going to be difficult.
Just months ago we were talking about the effects of the storms, the hurricanes that hit the southeast,
right?
And we're here in LA just weeks after the worst of the. I believe
2 weeks after the worst.
They're still going on in some areas, and even though there weren't a lot of hotels that were, damaged or destroyed, it's still just a general insurance environment where
it raises the risk, right, of insuring in an area like this that is so susceptible to this disaster that's happened, wildfires that have happened year after year. Yeah, those are pressures on the risk environment for insurance that's going to keep insurance rates going up, and that absolutely hits the EBITDA for owners, and that will continue. We don't see that moderating in 25.
So, with all those fun things to talk about, I'm curious, with all the friends and colleagues you have in the industry, either in conversations you have with them here at the conference or, other meetings, phone calls, what is the general sentiment that you're getting from them? What's the vibe?
Well, for me, I'll say, I think there's a lot of people that I say beat me up about the forecast. But, they feel like we're conservative, that we're too conservative on our outlook for RevPAR for this year. And it's good discussion because I think, I've said there's upside and there's downside in this forecast. And with this forecast, there's not anything that gives us certainty to change the model to say, oh yeah, we're definitely going to have this upside. I do think, and I said this on stage at the numbers panel, for this year, I think there's more upside to our forecast. I think that there can be some unleashed spending from corporate and individual if administration gets tax cuts through. I think that we could see some loosening up of corporate spending that would benefit our industry and would certainly give us upside to this forecast. Will it go up 3 or 4 more points? I'm not sure there's that much upside to it, but I do, yes, we're at a conservative view. 1.8 is where we finished 24. So what we're saying is right now, the outlook is more of the same. And I think there is some upside, but there's just no certainty as for one of the forecasters for the industry, that we know every owner, operator, brands out there putting their plans in place basing off what us forecasters are doing. We can't just put out a number based on hope. We've got to have some certainty of understanding what changes structurally are going to impact and help, lift it if we think there's upside, and it's just not there yet. But hold on and let's see what the next quarterly update looks like. I'm hopeful that we see some changes that unleash more spending that benefit our industry, and we see that upside take hold.
Well, any final thoughts before we close out here?
No, this is great. I think it's certainly a period where there's more uncertainty or volatility. I'm not sure which word to use. You don't, there's a lot of headlines and you're not sure what's happening. So I started my panel yesterday saying, be confident in at least the certainty that you have is that our forecast is the same. So no, I think it's a good time. It's a challenging environment to operate for sure, but I think there's a lot of opportunity, and we'll see some of that play out through the rest of the year. I'm excited about it.
Well, thank you, Amanda, and
Thanks,
thank all
Brian.
of you for listening. Stick with Hotel News Now for further coverage from the conference.
Hi, I'm STR's Isaac Colazo.
And I'm co-stars Jan Freitag. And together we are the data geeks behind Tell Me More, a hospitality data podcast on the Hotel News Now podcast network.
Every month, we bring you a fresh take on the latest hotel data, insights into the travel trends behind that performance, and the big picture topics you should be thinking about.
And we also don't mind getting into some good-natured disagreement from time to time. Hey, when Isaac and I start talking data together, anything can happen, and it usually does.
Find us on hotelnewsnow.com and subscribe to the podcast on Apple Podcasts, Spotify, or wherever you like to listen. Search for Hotel News Now, and thank you for listening.
This episode of the Hotel News Now podcast network was recorded on January 29th, 2025 by Brian Roten and edited by Rachel Daub. Look for this and more at hotelnewsnow.com or anywhere you listen to podcasts.